You're listening to the Option Alpha podcast from OptionAlpha.com, where we show you how to make smarter trades, learn how the stock market really works, and generate consistent monthly income. Now, your host and head trader at OptionAlpha.com, Kirk Duplessis.
Hey everyone, this is Kirk here again from OptionAlpha.com, working every single week to make this the most popular investing podcast offered online because it's based on one thing and one thing only, and that's helping you make smarter trades. So again, thank you so much for tuning in today. On today's show, we are finally releasing the options backtesting software. Lord Almighty, it has been a process. It has been a long haul, and I've learned a ton about doing software development and research, and we are finally at the point we feel insanely comfortable to release this software publicly. You've been hearing me talk about it for a couple weeks now, and many of you have been hearing me talk about it for a couple months now, but it is now available and open to you guys to go ahead and purchase. Now, before I even get into anything else, I really want you to understand this one point that I believe in before we get into this podcast kind of talking about it. And that's, I believe I've truly given each and every one of you enough value through the last couple years, from training, videos, podcasts, email support, phone calls, whatever it was. I get millions and millions of emails at this point over the last couple of years from people saying how great our training is, how wonderful it is. It's changed them. It's, been the light in their tunnel, whatever it is. I believe firmly that I have earned the right for just a solid ask from you to purchase our software today. Not take. I'm not saying that I'm taking from you. I think I've earned the right to be here today at this point and legitimately present a solid ask from you to purchase our backtesting software because I think it's insanely valuable for you. And I have no ifs, ands, or buts about it. I am 100% confident in what we put together that nobody has and will be the leading industry standard for many years and will legitimately change the lives of lots and lots of people. So again, it's not a take. If you don't want it and don't get it, I'm totally fine with that. And I'm not going to abandon you. You'll still be in my family and my community, and I will help you out. But again, I believe I've earned the right over the last couple of years of doing the show and everything that we put out for free, that I just at least get the opportunity for a good ask, right? A good solid ask. And so that's all I'm really asking for today, is to go over this and kind of figure out if it's right for you and if it's something that, kind of fits within your budget and something that you want to do and something you want access to. So I'll start by saying, the backtesting software itself was a huge project, right? We went back through and just first had to start buying data. That took forever and a lot of money. We then had to hire developers and teams to actually do the backtesting for us and help us out in doing that. That took a lot because I don't know how, I didn't know at the point, how to do this, how to run database queries. I was totally ignorant to all that. And so if I can learn that, you guys can learn options trading, that's for sure. And then it just took a long time to put the systems in place that would allow us to scale at the point at which I think we're going to scale very quickly once this goes live today. And that's, putting in the right Amazon servers and the right MySQL databases and cloud computing software so that when you guys run tests, which is not just like running a simple stock test, right, where you're testing price, you're literally testing millions, billions potentially of rows of data and different data points in short seconds. And we've recently had as many as, 400 or 500 people through our elite membership program testing strategies every single day. And they've combined tested almost 250,000 strategies to this point in the last week and a half. I mean, so the types of tests that people are running and the speed at which people are running it has to maintain that. And so that's been a huge component of what we've been trying to do over the last couple of months and getting this ready for you. But again, now that we're at this point, the backtesting software itself is totally groundbreaking. And I'll tell you why it's so important that you kind of check this out. And again, I didn't mention this earlier, but if you want to learn more about this and obviously sign up, you can go to optionalpha.com/toolbox. That's just one word, TOOLBOX, toolbox. But what's really cool about the backtesting software is that, what we've tried to do is take something that's insanely complicated. I mean, an option strategy individually by itself is really complicated. There's lots of variables that go into it. And we've tried to take all of these strategies and compress them into a piece of software that's not only intuitive and easy to understand how to run, that it's a logical sequence that literally anybody can do, but also that the results that come out of it are extremely powerful. And I think the trouble for me was in building this, making sure that we had all the right components and didn't leave anything out, but at the same time that we, tried to pare this back as much as possible so that it's really, really intuitive on the front end, seems so simplistic on the front end, but in the back end, it's like lots of stuff is happening. I kind of like envisioned a duck on the water. I don't know why I did that, but that's what I envisioned. A duck on the water is so calm on top. Everything looks so easy and streamlined, but underneath it's just going, a mile a minute. And so that's the way we built the backtesting software for you guys. So I'll start by saying this, and then we'll get into more of it. The backtesting software is really two components when you purchase access to it. The first component is the ability to backtest different trades and different strategies across different tickers. That is the bulk of what we were doing first. That was really the first component that was launched. The second component of the backtesting software is what's called the trade optimization software. And so I'll talk about that here in a second once we get through the backtester itself. Now, when you guys go to the website now, what you'll notice is that the backtesting software is inside of a new kind of product, if you want to call it that, a package, if you want to call it that, called the Toolbox. And so we've kind of decided at some point that we're going to bring these things together and put them under one thing, one air finger quotes thing called the Toolbox, because that's really what they are. They're tools that you can pull out and use at your discretion. So now what you will see, for those of you who already have this, you'll just see this slight tweak in the way that it's worded on the site. No links or anything will change, but the watch list and the earnings calendar are now part of the Toolbox under what's called the Lite version. So Toolbox Lite. So if you purchase access to the watch list and the earnings calendar, it's going to be basically the same price. That's not changing, but it's now under what's called the Toolbox Lite version. The backtesting software and the trade optimization software is now what's under what's called Toolbox Plus. And so this is the obviously enhanced version of these tools that you can buy. You can buy the light version of the tools, which is the watch list and the earnings calendar, or you can buy basically the plus package, which is now the backtesting software and the trade optimization software, etc. So we just felt like after talking with a lot of people and talking with a lot of members, now that we've got more stuff going on, it's got to be all in one house. And what better way to do that than to call everything basically the Traders Toolbox. It's all these tools that you can use and pull out at your discretion and use as much as you want, right? So obviously, if you buy access to the plus version of the Toolbox, you get everything in there, including the watch list and the earnings calendar. You have to buy access to that level, obviously, and it's additional than the actual light version, which many of you already have. So you'd have to get that additional version. But once you go to the website, it's all there explained, so you have that in your, basically in front of you and can make that decision. So the backtesting software itself, like I said, is the ability to backtest any trading strategy that you want with a million combination of variables that you want across different tickers and different frequencies. What's cool about this is it's set up in 2 steps. It's literally 2 steps and done. So a couple clicks, and then you have the ability to test the strategy. So I want to talk through how it kind of works on the website. You can go to the website and kind of demo this right from the main page, again, optionalpha.com/toolbox. And there's a link over there to check out the demo version of it. It's really easy to use, so you can walk through it as you're listening to this or just listen along. But the first thing that you obviously have to do in step 1 is just choose your strategy that you want to use, right? So what do you want to test? You want to test credit spread, an iron condor, an iron butterfly, debit spreads, calendar spreads, straddle strangles. We basically did 10 strategies, the 10 top strategies that anybody would potentially use, combination of buying and selling strategies. So in this case, let's just do like a short straddle, for example. After that, you then have the ability, or box reveals itself to then choose the ticker symbol that you want to test this on. So now you can really hone in and say, you want to test this on the broad markets, S&P, do you want to test it on an individual security that you really like trading? So a lot of people like Apple or Amazon or Chipotle or whatever the case is. Now you can test different strategies on those securities. So the whole idea in doing this is to give you pinpoint accuracy into testing multiple different things. And again, it runs really fast. So you can test a strategy here in one ticker and then duplicate it and test another strategy in a different ticker. And it takes literally 2 clicks of a mouse. So we made it very, very easy to test out different strategies. So in this case, we're just going to go ahead and do SPY, which is the broad market index. Now, the last box that you have to choose in step number 1 is trade frequency. So we've already selected the option strategy. Now we're going to choose the ticker symbol, and now we're going to choose the frequency. Now, this is something that's really, really different and really kind of groundbreaking, although it seems really simple on the outside. By having the ability to test 3 different frequency variables, we've really kind of expanded the universe of different ways you can trade exponentially. But the different frequencies that you can choose are daily, weekly, and sequential. So I want to make sure you guys understand what these 3 things are. So sequential means one trade, one after another. So you enter one trade and you don't enter another trade until that first trade is closed, profit or loss, whatever the case is, but never overlapping trades. So this is literally like a train in a row sequentially, never overlapping cars, always one by one by one. The next way that you can do it is called weekly. So when you enter a trade weekly, it will always look for a new opportunity every single week, but it will never overlap 2 trades in the same week. So if you enter a trade on Monday, it will never enter a trade for the rest of the week until it gets to the next Monday. And then, and only if the trade parameters are met, will it enter the next trade. So now you start overlapping or laddering these positions over time on a weekly basis, right? So you could have, depending on what strategies win or lose or how quickly you take profits or whatever the case is with stop losses, you could have a lot of trades that kind of overlap, but it will never enter more than 1 trade per week. Now, my personal favorite that we added here, and this is where a lot of the data comes in place on the back end, is a daily entry. So the ability to do a daily entry is really, really cool because now it can literally look for the smallest denomination trade and increase your trade frequency almost exponentially if you enter a trade every single day. Now, this doesn't mean that it will force a trade in every day. It will only make a trade if there's room in the portfolio and if the trade parameters are met, right? So this is what we ultimately do here at Option Alpha is we try to make lots and lots of trades every single day when the market parameters are favorable and when there's room in the portfolio to add. So that's how the daily entry works. Now, again, you can choose from any of these and adjust them along the way. In this case, we're just going to do the weekly entry for SPY. Okay, so now that we've got that set up, all you do is click next and you go to step number 2. Now, step number 2 is where we take all the information from step number 1 and give you the ability to really customize your backtest. Now, again, this is where we've done things totally different here at Option Alpha and have built this software out so that you can really pinpoint the type of trade that you want to enter. And so I want to go through kind of all these custom variables that you have available and kind of at your fingertips now. So the first thing that you'll do is you'll choose your days until expiration on average. So what we've done is we've built in the ability to test anything from basically 10 days to 80 days until expiration. After that, liquidity gets really low and we don't want to test leaps. We don't think that you should be trading that long anyway. So we tested everything between 10 and 80 days. So in this case with SPY, we're going to test just a 40-day on average entry. Now this means that it's an average entry. So it could have been 39 days for one situation and 42 for another. But we gave it about a 5-day variance in here for entry so that you're averaging around that 40-day time period. The next variable that you can rank and kind of sort by is a minimum implied volatility level. So what's really cool is that we've already calculated lots of historical volatility levels for different securities. And so now you can either set to have a minimum filtering for implied volatility or not. So the default is to not have a setting. So meaning it will not look at implied volatility as any sort of filter for the strategy. Or you can set it at 25 or 50 or 75, which is just common implied volatility levels to see how the strategy might react or perform based on different implied volatility levels. And so again, it's very easy to use. You can just kind of toggle the slider bar right over. From here, you can then choose a starting portfolio value. So this was great that we thought to at least add a couple of these in here so that you can get an idea of how different portfolios might grow over time. So we added 5,000, 10,000, 25,000, 100,000, and 250. Now, if you have anything over 250, if you have like, let's say 500,000, you can basically just like double the numbers and see how it would, return over time. So you can do a little bit of, rational thinking as to, how a larger portfolio might react. But we thought that those ranges were at least acceptable enough to give you guys an idea of where the portfolio might go and just kind of how the equity curve might evolve over time. The next thing that we have is an overall allocation. Now, this is an interesting one that we really took some time on, kind of thinking about how we would fit into this whole backtesting model. What we always say is that you should never allocate more than 1 to 5% to a single symbol. But in the case of backtesting, it's really, really complicated to backtest a portfolio of symbols at one single time. Now, we've done this as part of our profit matrix report, which will be coming out in the 100th episode of the podcast. So you want to listen into that. But for the backtesting purposes, we've given you the ability to allocate, in this case, overall allocations between 10 and 50%. In the idea or in the spirit of saying, okay, if we're going to enter trades like this across different symbols, what would a kind of like mini portfolio of SPY type straddles do, right? So you could use DIA and IWM and maybe TLT and EM and EWW, anything that's a major market ETF like SPY, right? So if you're trading Facebook and you backtest Facebook, you could use Twitter or Microsoft or some of these other technology companies as like surrogates for what it could be if you had a small portfolio of that. So I don't want to misinterpret this part of it. It was definitely something that we, kind of toyed around with as the best, possible way to do it. I think this is ultimately the best way to go about it because it does show you the impact of how your allocations impact returns and how that impacts sequence of returns, which is something that we talked about previously in show number 92 with TLT in depth. But it's a really, really powerful tool that you can just kind of tweak and adjust along the way. And in particular with SPY, most of your stuff should be beta weighted to SPY. So you could kind of see what a portfolio of beta weighted short straddles would look like compared to SPY, right? So we have 10, 20, 30, 40, 50. Again, nothing over 50 because we never suggest really more than 50%. You could obviously if you want to, and you can, do some math on your own if you want to assume allocations over that, but you don't need to do anything over 50 to ever generate above average returns. And that's pretty evident in some of the stuff that we've been doing. The next thing that you can test here is profit taking exit. So this is cool again, because we wanted to test this concept of taking profits early. So every single day the test and system would run and see, okay, where did the trade end? Did it actually end up taking profits? Did it not? Did it meet a profit target that would suggest that the trade is exited? So we, again, have a standard set at none, which is no profit taking at all. The trade goes all the way to expiration, win, lose, or draw. You can take profits at 25, 50, or 75%, which are kind of standard levels. The next thing that we have is a stop loss exit. Again, we don't suggest for most cases that you use a stop loss, but we wanted to have the ability to test that. Maybe there is, for some particular strategy setups, a better stop loss level than none. Maybe it's just a really wide stop loss, but it does curb that tail risk that might be present in a strategy. So again, the default is none, no stop loss, which means that the strategy is taken all the way to expiration, win, lose, or draw. But depending on the strategy that you're testing, this stop loss level will adjust to show you different stop losses based on the strategy. So for short premium strategies, you could have stop losses that are 100, 200, 300% of the initial credit. For a debit spread, you will never have a stop loss more than 100% because you can't lose the premium that you paid, right? You can't lose more than that. So it will dynamically adjust on the fly based on the strategy that you're choosing, which is really, really cool. The last kind of like section in step number 2, and again, I know I'm covering a lot of details here, but it's really super, super easy, super simple and intuitive, a lot of like quick little clicks and you're done and off running a test. The last section in step number 2 are the strategy specific parameters. And these are things like, in this case with a short straddle, a short delta strike. So where do you want to sell options? Are we selling at the money? Are we trying like a slightly out of the money? If you test a strangle, you'll see a new set of parameters show up as to how far out you want to sell premium on each side with your strangle. If you test an iron condor or an iron butterfly, it'll ask you quick questions like how wide do you want your spreads? Do you want them $2 wide or $3 or $10 wide? So we gave you a lot of this capability built in here to test all these different variables because they truly do impact the performance of a trade. If you're selling options, at the 15 delta versus the 25 delta, that's going to really impact the performance. And you have to have the ability to test that. And there's no system out there that has this type of very specific but very simple to use interface for the ability to backtest this type of trading strategies over time. So in this case for SPY, just so you guys know how we're testing this one, we did a weekly SPY short straddle. We're going to do 40 days to average expiration, no IV rank, 20% overall, which means 80% of our portfolio sits in cash during this time period. Profit taking at 25%, which is what we typically say anyway, and no stop loss level. So if we lose however big the loss ends up being. And we'll do the short strikes at a 50 delta, which means that we're effectively selling at the money options. We're not selling options out of the money. So when I run this test, in literally half of a second is when you get the results. The system's that fast. You see that the total return for this strategy was 79% over the testing period. It was a 6% annual CAGR, which is a compound growth rate, and a Sharpe ratio of 1.67. Now, you don't see the equity curve because we're doing the podcast, but the equity curve is pretty smooth, pretty steady, and definitely beats the market, outperforms the market by a long shot, with a total profit, at least in this case, of $197,000 with a starting portfolio of $250,000. Now, of course, from here, you can simply, with one button, either start completely over or edit this existing backtest and just tweak one little area. So with one button, you can click edit, tweak anything you want to, days to expiration, profit targets, minimum IV rank, allocation, portfolio size, whatever you want to do, and rerun the whole scenario very quickly. It's that fast, that intuitive, and that's what I ultimately want it to be because I want to use it fast. I want to be able to really kind of quickly on the fly kind of change things. So on the summary page, though, let me tell you kind of what you'll see on the summary page. And again, you can get a demo version of this by going to optionalpha.com/toolbox. That's just one word, optionalpha.com/toolbox. There'll be a link over so you can choose a demo version, kind of run through a sample one and get sample results. Obviously, it's not going to be a real test that you run, but it shows you kind of what's possible from the strategy. So the things that we've added inside of our performance page are a couple of the key things. And really, I say a couple, there's a bunch of different sections here. All of it gives you the ability to print this to a PDF so you can keep it, save it to your desktop, do whatever you want. Obviously, it's copyright, trademark information, proprietary, so you can't share this with anybody else without expressive permission from us. But it gives you the ability as the user to save these. If you run a good test and you get some good performance numbers, great. Save it as a PDF, right? And keep it on your desktop or print it out. The first section in here is obviously like the total numbers. So total profit, dollar-wise, total return, percentage-wise, and then annual compound growth rate. Now, this is really the important one. It's different than an annual average return, which we have down below, and you can see that's another number and metric that's in there. But a compound growth rate is much more indicative of how a strategy will perform long-term. Because if you take a very simple example of, let's say, a strategy makes 100% the first year and then loses, let's say, 50% the next year. So it was up 100%, right? And then it loses 50% the next year. So the trouble with this is that when you go through this situation where you're up 100% and then down 50%, you could have a $10,000 account that goes to $20,000, but then loses half of its value. So now you're back down to, $10,000. You really didn't go anywhere in 2 years. Your true annualized gain is zero. You didn't make or lose money. And that's what the compound growth rate shows you. Now, if we just took the average of those 2 years would be a basically 25% gain. So it's kind of misleading if you just look at the averages, which is why we focus so much in our testing software on the compound growth rate, because that's really where you get a lot of the returns from is that compound effect and how you can live off of that information. The compound growth rate of the stock market, the S&P, at this exact moment in time is about 6.88% for the S&P. And that's adjusted for inflation and including dividends and all that stuff like that. So that gives you, again, a basic framework for maybe how you can start looking at strategies. It's not that a 6% CAGR is a 6% per year. It's the compound growth rate that's really important. The next thing that we look at is the Sharpe Ratio. Sharpe ratios are really important in the financial space, especially in the hedge fund and the investment space, because it's a measure of risk-adjusted returns. It's really looking at, okay, how much return did you get, and did you take on more risk than necessary to get that return? So high Sharpe ratios are indicative of getting a lot of excess return for not taking on too much excess risk, right? So Sharpe ratios of 1 are considered really good, pretty decent. Sharpe ratios around 2 are great. Anything in that neighborhood is probably a pretty good Sharpe ratio. 3s are like really insane and kind of unheard of in some cases. So in this case, with this strategy, the Sharpe ratio was 1.67%. The strategy, again, that we ran for SPY had a CAGR, annual CAGR of 6% even. So pretty decent portfolio curve and pretty decent growth rates. The next thing that you'll see on the returns or the performance table is basically the P&L of the strategy versus the S&P. So we've taken your strategy, we've graphed it out basically every single week based on the gain or decline in the portfolio curve, and we've shown that graphically compared to the S&P, and you can hover over it at any different period that you want and see the return values in there. So again, very easy and intuitive to use. Down below that, you'll start seeing more consistency metrics. So we have these sweet little gauges and dials in here that show you consistency metrics, things like win rates. So how often did the strategy win? Again, this is going to be a big factor based on your deltas that you select, your stop losses, your profit taking, etc. So in this case, with our strategy here, it won 82% of the time. It also has your max drawdown. So how big was your drawdown at any time, peak to trough? And in this case, with this strategy, it was 22%. Not too bad, actually. A pretty good, consistent strategy with a nice high win rate and pretty low drawdowns. And then it also shows you the total number of trades that were made compared to other trades in a similar strategy. How often were you trading? In this case, we made 395 trades during the testing period. Below that, we've got more numbers on your average monthly return. So how did the distribution of your monthly returns affect the portfolio? What was your average monthly gain? In this case, you were earning about 0.5% per month. We also have things like how long were you holding the trade? How long were you in the trade? On average for this one, it was 26 days. The average premium that you received. This is kind of interesting because it shows you on a per kind of contract basis how much money you're really taking in for this strategy. Now, this is where, in this case, and I'll mention this here, we did not include commissions because it's stupid of us, frankly, to include one broker's commissions and say that that is the end-all be-all for everybody. I think that you guys are smart people that you can include and factor in commissions on top of whatever you're doing. In this case, the average credit that you took in for this strategy was $674. That's for one lot spread. So if you traded a one lot spread at, say, Thinkorswim or Tastyworks and you have low commissions of $1, you're paying $2 basically to get into that trade. That commission cost is never going to really outshadow or affect this strategy that much at all. Now, if you're trading a tight credit spread and you're taking in $30, then yeah, that might impact it. And you'll have to look at that and make a case-by-case decision on this. But we felt that it was probably best to not include a commission structure and let you kind of factor this in, though we've given you all of the components necessary to really determine if commissions will play a big part. The total number of trades and the average premiums really show you kind of the numbers that you need to know before you factor in commissions. The other thing that we've calculated is the drawdown days. So how long did your drawdown occur? How many days did it take for you to recover that drawdown? And in this case, with SPY, we had a 22% drawdown that only lasted for 32 days. Now that's really low. Most of the drawdowns that we've seen, and I just literally ran this randomly as we're doing this, so I'm glad it actually worked out to be a good strategy. But with the drawdown days that we're seeing are definitely higher than that. That's probably pretty low, but again, you'll start to see it as you run more tests. But it recovered really, really well. And that drawdown was really at the end of the 2008 crash, kind of before the market took off. And the strategy really recovered pretty well from there. The next thing you'll see is a table of monthly distributions. This is one of my personal favorite that we've added. It really shows you how often, just visually, you're gaining every single month or losing. And it does this with very simple green and red bar lines that, again, just give you a visual representation of where your monthly distribution of profits or losses come from. Are you losing every other month, or is it, 5 or 6 months in a row of gains and then a loser, then 5 or 6 months in a row of gains and then a loser? How does that, distribution look? And again, this is more so that you can start to get an idea of how this strategy is going to perform and what to expect moving forward. We're all creatures of, just looking at, the expectation. If we know that something is coming up, we're much more likely to trade through it. So if you know that on average, this strategy may be, lost every 4th month, okay, great. You can trade through that. You know that that's just part of the system, part of the process, right? The final table down below shows all the monthly return numbers as well as the annual return for each year. So it basically graphs and shows you all of the distribution of numbers over the entire testing period. Now, some securities did not have data all the way back or had different data or were fairly new that they may have missed a year or two in 2007, 2008. In those cases, we just assume zero return. We don't, blanket it in any way, shape, or form. We just assume that it's zero return during that time period. And you'll see that when you actually start running some tests. The last kind of section down below, and this is really what wraps up the backtesting results page, are some of the averages per day and per trade. So again, what we wanted to do is we wanted to break down all these trades into the individual components. So one lot trade, what was your average P&L per day? What was your average P&L percentage per day? How much did you make on average per one lot trade? And how much percentage did you make gain or loss per one lot trade? So this is a really easy way to, again, take these basic components, then start thinking about commissions, start factoring that in, and also start thinking about scaling. If you're going to do 50 contracts, how much are you making per contract? Does that really cover the commissions that you pay at your broker if you're not at a cheap broker or if you need to reduce your commission costs? So a lot of this information, I guess, kind of comes into play and is really, really important because it gives you a lot of context as to how these strategies perform over time and again, what you can expect, right? So once you've done all of that, again, you can print this out as a PDF or you can go ahead and edit it and run as many backtests as you desire, as your heart's content, I guess. So the really cool thing about this, and I'll take a break here before we, talk about the options, the optimization software, because that's the next thing I want to talk about. And I want to talk a little bit about pricing for this. So obviously during this launch period, when this thing rolls out, it's not going to be cheap, right? I mean, it's not a $50 thing. It's going to be a couple $100s to get the options backtesting software and the trade optimization software. And we really struggled with the ability to price this out effectively. And I'll tell you why, because I've talked about this a lot before, most notably in show number 91, where we talked about kind of the future of Option Alpha. And I really believe that what we're doing here is kind of a crowdsourcing platform for people. So we're taking membership revenue that we collect not only from membership, but also from selling research like Signals and the watchlist software that we have now already. And we're funneling that back into bigger and bigger projects like this. And we'll ultimately do even bigger projects, as I've mentioned in show number 91. And so for me, I wanted this to be insanely valuable, but we have to cover the cost of maintaining this. So I could have gone two different ways here. And I want to, again, clearly describe why I decided to go one way versus the other with the input of the other members that were in our community at this time when I did this. Because I obviously reached out to you guys and wanted to solicit feedback. And we got a lot of that from people. There was a lot of forum threads going on about it. And so that's where we were. So we could have obviously gone two different ways. The first way, and most, I guess the easiest way, would have been to have a monthly reoccurring cost for accessing the software. And to tell you guys honestly, that's probably the way that would have ultimately led to bigger profits for us and a more successful business for Option Alpha on the revenue side. But I decided not to go that way because I don't think that that's what this is ultimately geared for. And I say this in all honesty because I left money on the table by not doing that. In fact, I had many of the people who not only advise me on the business side, but also friends and colleagues in the industry say I was crazy for not doing this as a true SaaS software program where you have a monthly cost to do it. In fact, a lot of software out there is monthly cost. Believe me, I know I pay for a lot of this software just to even run the website itself and hosting and, management and security and everything like that. But for me, that's not what it was about. I wanted people to have an investment in this. And obviously the investment, had to be a little bit significant. It's not going to break the bank, but it's a couple $100 investment in this. But I want you to have lifetime access to this because I want it to be a great value for you as far as what it can do to your portfolio in the future. And I feel like I want you to be part of our community much longer than, say, 30 days of rapid testing, and then you leave because you don't want to pay the monthly fee. And that's okay, and that's ultimately what people do in a SaaS program, but I want people to be part of this community much longer than 3 months or 5 months. I want you to feel like you're invested in this like I am and have a lot of input into the future direction of how we improve this. And more so than that, I want you to have vested interest in any updates that we do in the future. So every single year, we will continuously buy more data and redo everything so that when you run tests every year going forward in the future, it's always updated with the most relevant information. And that to me is really important as we start expanding tickers eventually and start doing more and more capabilities with this software. I want you to know that getting in today, or even if you're listening to this podcast a couple months from now, that you're getting in with an investment that obviously is not cheap, but it's not insanely expensive by any stretch and represents a ridiculous value for your investing life, I guess is really what it's all about. So that's why we decided to go with just the one-time cost with lifetime access. Obviously, if you want an upgrade to the lifetime membership, you get everything that we have, research and everything we have now or in the future as part of your lifetime membership. So you can do either one. It's your choice. So the other thing I want to talk about, obviously, is the optimization software. Now, this is really my favorite thing that we did. And I'll tell you why it's my favorite thing, because the backtesting is cool, no doubt. And you probably listen to this, you're like, Kirk, how can you be the backtesting? And yeah, nobody really can. But we kind of took it a step further. And the reason that we did this is because I started asking myself, as I was doing a lot of testing and seeing results come in, I started asking myself questions like, well, what if I'm not at 40 days until expiration? So the example that we had with SPY, what if we're not at 40 days until expiration? Do I wait until we get to the next 40-day timeline until I make another trade, but then I pass, how much time of not making a trade and potentially missed opportunity? And so I started asking myself the same question over and over and over again in my head. And that question was, what is the exact strategy that I need to use right now? In this exact market environment, what is the exact strategy that I need to use that will be the most optimized strategy of everything else that's out there? If I need to do it at a 50 delta, great. If I need to set my stop loss at X versus Y, great. But what is that level? And sometimes it's hard just to run all of these tests back and forth to figure out that level, especially when you're on the go and on the fly and need to figure out a trade right now. Like if I'm looking at the market right now, what do I need to do? What is the best possible strategy for me at this exact moment? So we answer this question by building out the Trade Optimizer software, which is way more complex, like to another degree and another level than the backtester, which is already insanely complex. And as a guy who really at the beginning of this process knew nothing about programming and knew nothing about, building out these algorithms and the software, I can tell you it's like literally like small French fries compared to like Big Mac with the Trade Optimizer. I mean, it's just a huge difference in the software. But with the Trade Optimizer, again, we tried to make it so insanely simple and intuitive and so powerful that it gave you all the information you needed to make a trade based on whatever market conditions are present right now at this exact moment. So whatever's present at this exact moment, what are the top strategies that I could use? And again, we didn't want to give you one because, as you'll see, when you start running this, it's not just about one strategy. It's about figuring out that strategy that works best for you. So maybe one strategy has a good win rate, but really high drawdowns. And the one below it has a slightly lower win rate, but dramatically less drawdowns, right? So now you can start to make the decision, hey, based on these, top 10 or top 20 that we show, which strategy kind of fits your personality, your portfolio, how often you want to trade, etc. So inside of the Trade Optimizer, which you guys, again, will be able to demo and look at when you go to optionalpha.com/toolbox. Again, that's just optionalpha.com/toolbox. It's really a one-page thing and done. It's not even 2 steps, which makes it even simpler for you. But the first thing you have to do is select an optimization factor. So what are you really going to optimize your strategies based off of? And we gave you 2 different things. We gave you the annual return or CAGR, which we talked about before, this compound growth rate, or we gave you Sharpe Ratio. I ultimately think that both of these are very complementary of each other, but I would believe that Sharpe Ratio, in my opinion, is a better metric to use moving forward if you're going to do anything. But look, we gave you both, and you can switch back and forth if you want to. The next thing that you have the ability to choose is you have to choose a market outlook. So you have to choose if you're bullish, bearish, or neutral on the market, right? Whatever security you're looking at, doesn't matter. You can use the signals from the technical analysis signals research that we did to use, those assumptions on whether you're bullish, bearish, or neutral. But you got to choose something. What direction do you think the market's going? If you don't know, then just choose neutral. And the last thing that you have to choose in these drop downs is you can choose what type of account you have. Now, this is really cool because now we filtered the strategies down based on the type of account you have. So if you have a margin account, then you can trade pretty much anything. If you have a retirement account, you're limited to what you can trade. So now we've given you the ability for the software to recognize and be intuitive enough that you're trading in a retirement account that it filters the strategies out so that you're only trading strategies for a retirement account. So in this case, I'll just select margin for whatever the case is. Now, the last 2 things that you have to select are basically the market situation or the market setup. So how far are you until expiration on average, right? Like how close are you to expiration? Are you 30 days or 40 days out, right? Or 60 or 70 or 80 or whatever the case is. And where is implied volatility for the security you're trading right now? Is implied volatility low? Is it at 25, 50, 75, right? And then that's where you start to really pinpoint. So now you've determined, okay, I want to make a neutral trade in my margin account. I'm 60 days until expiration and implied volatility is low. So I'll just say none, right? Now, inside of the Trade Optimizer, you can hit go, and that will literally run all kinds of different backtests across all kinds of different securities and figure out what the average returns are for millions and millions and millions of trades that we've run and pinpoint exactly which strategies you can use in this exact market situation. I literally get goosebumps. I wish I could do this thing like live and show you guys. I get goosebumps when I talk about this because of how awesome this thing is, really. And again, I said in the beginning, I think I'm due a solid ask. This thing is so awesome. I guarantee people are going to want to buy this, like buy the company from us. And we're not selling it. I'm not going anywhere, so don't worry about that. But this thing is so incredibly groundbreaking and amazing that it literally gives me goosebumps when I do this. So then it literally spits out in like 2 seconds or 3 seconds. It takes a little bit longer to run millions of tests compared to one. But it literally spits out all of these different strategies right in a row, like ranked 1 to 20 right in a row for you. And you can see all the annual CAGRs and the Sharpe ratios, and you have the ability to filter by different, levels. So do you care about win rates? Good. Filter it by win rates. Do you care about annual return or Sharpe or whatever, or drawdowns, whatever? Filter and rank all of this stuff by whatever you want. And inside of here, and again, you can see this when you demo it at optionalpha.com/toolbox, but inside of here, you'll be able to expand the details of a trade and see exactly how that setup should work. So the exact trade setup you should use that should generate an X annual CAGR. So in this case, maybe, a trade setup that would generate a 6% CAGR. Here's exactly what you need to do. You need to have your short strikes at this delta. You need to have your spread width at whatever, or you need to have your stop loss here. You need to set up this trade for, this profit taking level versus that one. Whatever the case is, it literally pinpoints exactly how you should set up the trade. There's no guesswork. And that's what we wanted to do. And I didn't want to do this. I mean, again, I selfishly built this for myself because I wanted to answer that big question I had. But there is literally no guesswork involved. It tells you exactly what to do. I mean, the only thing it doesn't do yet, because this is something that we're working on in the future, and this is our next big project for the next couple of years, is automate this trade for you. yet, because eventually it will. That's where we're going. We talked about, or we will talk about automation in show number 99 of the podcast, because it is the wave of the future. It is where things are going. And that's exactly where Option Alpha is going. This right now is the best thing that we can do right now, short of automating it, is tell you like literally on paper exactly what to do. You do this, and set it up that way, and you go do it. And that's what you should, that's how the trade works. So inside of each strategy, obviously, we have all the same kind of metrics from backtests that we've run on these, and it kind of runs like a mini backtest on these. It shows you the win rates, the drawdowns, how many trades on average you'll, get over the time period, the drawdown days, the number of days in the trade, average credits, et cetera, right? So all that stuff that you would generally have on a backtest, you can see some of these select metrics in here that we think are important because it's, average data. So we can't show you like a P&L graph, but it shows you kind of what the return should be and what you should expect as far as drawdowns and win rates, right? All insanely helpful stuff. And again, guys, I can't stress enough like how important this is. And like, this is groundbreaking stuff that we're talking about, industry changing stuff that nobody else has out there. And yes, it took some time, but it's so worth it to check it out, because one little tweak in your strategy, one change that you can make could have a massive difference in your P&L, could have a massive difference in your monthly returns, could have a massive difference in your win rates, right? One little tweak, and now you guys have access to all of this data, all of it, right? All of this software. And when you get in here, you have access to it for life, right? And any updates that we have, any improvements that we make over time, you guys get all of that access moving forward. So I really hope you guys, enjoyed today's show. And just before we wrap up, again, I want to let you guys know that all of this is available now under our new toolbox that we have at Option Alpha. Again, the backtesting and trade optimization software is under what's called Toolbox Plus, and the watch list and earnings calendar is now going to be what's called Toolbox Lite. You won't have to pay for it if you already have it. It'll be the same price if you don't have the Lite version of the toolbox. So you can buy today or upgrade to the Plus version and get the backtesting software and trade optimization, but it's all available right now on optionalpha.com/toolbox. That's where you can find out all the information on it, watch some more demos if you want to watch some more demos, and see kind of the demo versions that you can use and play around with before you purchase. So that's obviously all available and now open for everyone to see. And so I want to take a moment just to, again, thank you guys so much for listening. And if you've made it all the way to the end of this podcast, which I assume is probably a good majority of you guys, though I'm sure some people jumped off and just wanted to get in, and that's cool too. But I want to tell you guys, like, I'm in this for the long haul with you. I've made decisions, hopefully, for Option Alpha that, increase the longevity of this company. I want this company to be around, basically another 10 years plus. I mean, we're almost at the 10-year mark now where we've been around for a long time, that I want to continue to have this company be around and really change people's lives in this space. And that's really been the goal. And so I think with the options, backtesting software, and everything that we're doing, we are definitely on that trajectory. We're making huge leaps, and we're doing everything with you guys in mind, trying to maintain that value that I think is so present here at Option Alpha that nobody else has. And so I appreciate you guys being along this journey with me, and really hope you guys enjoy the backtesting software and trade optimization software as much as I do. I know that it's been a huge labor of love for me. I'm really excited to hear more feedback from people. You'll be hearing from me over the next couple of days as we continue to do more testing and some of these little case studies in show number 96 and 97. And then in show number 98 and 99, as we start talking about, kind of this IV opportunity, automated trading, all leading up to the launch of our profit matrix report, which again is going to be a lot of the same stuff that we've been doing, just on steroids even more, as we start launching our newest report called the Profit Matrix, which basically has all of the research in there from 21 million backtested strategies that we ran, broken down by strategy type and different market scenarios. It's truly going to be a groundbreaking report. I'm sure people are going to try to rip it off as much as possible, but we'll try to catch as many of those Jobos as we possibly can. So I really hope you guys enjoyed today's show, like I said. And if you want to learn more about the options backtesting software, head on over to optionalpha.com/toolbox. Again, if you want to join the lifetime membership, which gives you access to everything that we have at Option Alpha now and in the future for one payment, one time, you head on over to optionalpha.com/lifetime. That's just one word, lifetime, optionalpha.com/lifetime.
Thanks for listening to the Option Alpha podcast. If you liked what you heard, please drop by iTunes and leave a rating or comment. Plus, you can get everything: free email updates for future shows, transcripts, video tutorials, case studies, and more. Just visit our website at optionalpha.com.